It's March 2026. You walk into Walmart and notice your grocery bill is again higher than you expected. You fill up your car and wince at the pump. Your phone bill, your appliances, your furniture, all creeping up. And you're asking the question that millions of Americans are asking right now. Are Trump's tariffs costing you money? And here's the question nobody's asking loud enough. Why is silver, that shiny metal sitting in your grandmother's jewelry box, now worth nearly $95 an ounce? And some Wall Street banks are saying it could hit $309 before this year is over? Stick with me, because what's happening right now in the trade war, and what it means for your wallet and your savings, is unlike anything this country has seen in decades. Let's break it all down. Let's start with what actually happened, because in the last 2 weeks alone, the entire tariff landscape in America got flipped upside down. On February 20th, 2026, the United States Supreme Court, in a 6-3 decision, ruled that President Trump exceeded his authority when he used emergency powers under something called the IEEPA, the International Emergency Economic Powers Act, to impose sweeping tariffs on dozens of countries. Now, these weren't small tariffs. We're talking about the ones Trump announced on Liberation Day back in April of 2025, rates as high as 50% on countries like Cambodia, Vietnam, and Malaysia, and the tariffs he slapped on Mexico, Canada, and China in early 2025. All of it? The Supreme Court said, illegal. So what did Trump do? He pivoted. Fast. Within 4 days, he used a different law, Section 122 of the 1974 Trade Act, and imposed a brand new 10% global tariff on all imports into the United States. That took effect on February 24th, 2026. Now here's where it gets interesting for your wallet. That 10% rate applies to most goods. But some things are still exempt. Critical minerals, some pharmaceuticals, certain foods like beef and oranges. And the USMCA free trade deal with Canada and Mexico still gives those two countries their own exemptions. But this is far from over. The Yale Budget Lab estimates that all tariffs in place so far are projected to raise $1.2 trillion over the next 10 years. And according to the Tax Foundation, the average American household is already paying about $700 more per year because of these tariffs. $700. Think about that. That's a car payment. That's your summer vacation. That's groceries for a month. And it's coming straight out of your pocket. Now, a lot of people think the Canada trade war is over. It is not. Let me be very clear about that. Even after the Supreme Court ruling, the US-Canada standoff is very much alive. The USMCA-compliant goods are exempt, yes, but non-compliant goods have been hit with tariffs, and starting February 24th, 2026, those rates started shifting. Canada is also facing 25% tariffs on steel and aluminum under separate product-specific rules that the Supreme Court did not strike down. And Canada's new Prime Minister, Mark Carney, just today, March 2nd, he's in New Delhi finalizing a landmark nuclear energy deal with India. Some analysts see this as Canada quietly pivoting its trade relationships away from U.S. dependency. That's a huge signal. Meanwhile, Trump's trade representative Jamieson Greer went on the record saying any new trade deal with Canada will still include tariffs. Period. The result? Supply chains are tense. Companies that rely on Canadian steel, aluminum, and raw materials are paying more. And those costs, you guessed it, get passed on to the consumer. That's you. JP Morgan has warned that tariff uncertainty will create negative GDP impacts extending through 2026. The IMF put it bluntly in January 2026. These tariffs have, quote, definitely slowed down global activity. Global growth is now projected at just 3.3% for 2026, and the IMF specifically flagged that inflation will fall more slowly in the United States than in other major economies. That means prices are staying high longer here than anywhere else in the developed world. And here's a story that should make your jaw drop. When the Supreme Court ruled those tariffs were illegal, it raised an immediate question. What happens to all the money that was already collected? We're talking about roughly $130 billion. That's billion, with a B. Trump himself said giving it back would be a complete mess and almost impossible. Treasury Secretary Scott Bessent said the courts would have to figure it out, a process that could take years. But companies aren't waiting. FedEx immediately filed a lawsuit demanding a full refund, and they're not alone. Hundreds of other major companies, including cosmetics giant Revlon, aluminum company Alcoa, and food importers like tuna brand Bumble, have all filed lawsuits. This legal battle is going to drag on, and while it does, the uncertainty keeps hammering markets, keeps pressuring businesses, and keeps making economic planning nearly impossible for everyone from Fortune 500 CEOs down to the small business owner on Main Street. All right. You've been patient. Let's talk about silver. and why what's happening right now in the tariff war is sending this metal into historic territory. As of this morning, March 2nd, 2026, silver is trading at approximately $95 per ounce, and it already hit its nominal all-time high of 121.67 per ounce just 32 days ago on January 29th, 2026. Let that sink in. 121.67. That smashed records that had stood since the Hunt brothers tried to corner the silver market back in 1980. Since the start of 2025, silver has more than tripled in value, up about 320% from the $29 range. And even after a significant pullback from that January high, silver dropped nearly 20% through mid-February. It's clawing back fast. Why? Because today, safe haven buying just exploded again. With the US-Iran military conflict escalating, US jets were reported shot down over Kuwait this morning in what officials are calling an apparent friendly fire incident. Global investors are running straight to gold and silver as the chaos deepens. Kitco News confirmed as of 2 hours ago that gold and silver are hitting 4-week highs on this safe haven surge. Silver just broke back above $95. But here's what's different this time. This isn't just a speculative run. This isn't Reddit traders pumping silver like the 2021 Wall Street Bets episode. There's something structural happening, and most Americans have no idea. The Silver Institute, the leading global authority on silver markets, just released their 2026 outlook. And here's the headline: 2026 will be the 6th consecutive year of a structural silver supply deficit. That means for 6 years in a row, the world is consuming more silver than it is mining. This year's projected deficit? 67 million ounces. Gone. Not in the ground. Not in warehouses. Consumed. And demand is exploding from places most people don't think about. Solar panels. Did you know that every single silicon-based solar panel uses silver? In fact, solar energy accounted for about 17% of all global silver demand in 2024. That's roughly 29% of total industrial silver usage. The green energy boom is creating a silver vacuum. And here's the kicker. Silver paste costs used in solar module manufacturing have gone from about $5.22 per module in early 2025 to $17.65 today, a 238% increase. Reuters reported this just 2 weeks ago. The solar industry is now scrambling to find silver alternatives because the metal is simply too expensive. Electric vehicles. Global EV production is forecast to hit 14 to 15 million units in 2026. And each EV uses silver in its electrical systems. That adds an estimated 70 to 75 million ounces of silver demand from the EV sector alone this year. Semiconductors and AI chips. Every smartphone, every data center GPU, every AI chip needs silver for electrical contacts and conductivity. The AI arms race is quite literally running on silver. The bottom line? Silver has a day job now. It's not just jewelry and coins. Silver is industrial infrastructure for the entire 21st century economy. Now here's where the tariff story and the silver story crash into each other, and why you need to pay close attention. On January 14, 2026, Trump issued a presidential proclamation launching a Section 232 national security investigation into critical minerals. Silver falls under this umbrella. The administration ordered trade negotiations with foreign nations over critical mineral imports, because the U.S. is 100% net import reliant for 12 critical minerals, and more than 50% import reliant for a much larger list. For a brief, terrifying window, markets feared Trump would slap direct tariffs on critical mineral imports, including silver, platinum, and other precious metals. That uncertainty drove silver even higher. On January 15, 2026, Trump declined to impose immediate tariffs on critical minerals, giving markets a temporary sigh of relief. But the Section 232 investigation is still open, negotiations are ongoing, and the threat of future tariffs on silver imports has not gone away. Here's what that means. If the U.S., which imports a significant portion of its refined silver from Mexico, Canada, Peru, and China, all countries already in trade disputes with the Trump administration, were to face disruption, domestic silver supply would be squeezed even tighter than it already is. Meanwhile, the existing 50% tariffs on steel and aluminum and the 10% global tariff are already raising the cost of manufacturing everything from solar panel frames to EV battery components, products that need silver inside them. Tariffs aren't just raising consumer prices directly, they're raising the cost of the entire clean energy and tech supply chain. Let's talk about what the biggest banks in the world are telling their clients, because the range of forecasts for silver in 2026 is absolutely wild. JP Morgan says silver will average around $81 per ounce for 2026. We've already blown past that number. They've also issued a warning. If geopolitical tensions ease, silver could pull back toward $50. Bank of America is far more bullish. Their head of metals research, Michael Widmer, just updated his target. Bank of America says silver could reach anywhere between $135 and $309 per ounce before the end of 2026. Citigroup had predicted silver would hit $100 per ounce in Q1 2026. We're right on that doorstep. Physical investment in silver, meaning coins and bars, is forecast to rise 20% in 2026 to reach a 3-year high, according to Reuters. And FXS Street, as of just 5 hours ago this morning, has silver trading above $95, with a bullish trend continuing. The bottom line from Wall Street, nobody agrees. Bull case, $309, bear case, $50. The range is enormous, which means volatility is your number one risk right now. So let's bring this all the way home. What does all of this, the tariffs, the trade war, the silver surge, the supply squeeze, mean for you sitting at home in America in March 2026? Number 1, your prices aren't coming down anytime soon. U.S. inflation came in at 2.4% in January 2026, which sounds low, but remember, that's cumulative on top of already elevated prices from the past 4 years. The IMF has specifically warned that U.S. inflation will stay elevated longer than in other major economies. When you add the 10% global tariff to that, costs for imported goods, from electronics to clothing to car parts, stay high. Number 2, your clean energy costs are going up. Those solar panels you're thinking about putting on your house? The silver inside them just got 238% more expensive to source for manufacturers. That cost is already working its way into module prices and installation quotes. Number 3, American manufacturing isn't fully back yet. Trump's tariffs were supposed to bring factories home. Some have moved, but supply chains built over decades don't reorganize in a year. In the meantime, businesses are paying more and charging you more. Number 4, silver as protection. For decades, Americans have turned to precious metals as a hedge when they distrust the dollar and fear inflation. Physical silver, coins, bars, is seeing surging demand right now. The U.S. Mint has sold out of certain silver coin products. Online dealers are reporting shortages. The Silver Institute says physical investment is heading to a 3-year high this year. I'm not telling you to run out and buy silver. What I'm saying is, understand why people are. It's because when trade wars rage, when geopolitical conflict erupts, when the Supreme Court is striking down a president's economic agenda and $130 billion in tariff refunds are in legal limbo, people want something real they can hold in their hands. So what are we watching in the weeks and months ahead? Here are the 5 things I'll be tracking, and you should be too. 1. The Section 232 Critical Minerals Report. This investigation is ongoing. If Trump gets enough political pressure to protect domestic supply chains, he could impose new tariffs specifically on silver imports. 2. The February 2026 CPI report, dropping March 11th. The Bureau of Labor Statistics releases the latest inflation numbers in just 9 days. 3. The U.S.-Iran conflict. Silver already jumped on this news today. 4. The Kuzma USMCA review, July 1, 2026. 5. China trade talks, early April. Look, the world is more uncertain in March 2026 than it has been in a generation. A trade war, a legal battle over $130 billion in potentially illegal tariffs, a geopolitical conflict in the Middle East, and a silver market running at a 6-year structural deficit with Wall Street forecasts ranging from $50 to $300 an ounce. Nobody has all the answers. Anyone who tells you they know exactly where silver goes from here is lying to you. But you deserve to understand what's happening, because it is affecting your wallet. Knowledge is the one thing tariffs can't tax. If this video helped you understand what's going on, hit that like button. Subscribe so you don't miss our follow-up when the February CPI drops on March 11th. And drop a comment below telling me, are you feeling the tariff pinch? I read every comment, and I'll see you in the next one. Disclaimer: this video is produced for informational and educational purposes only and does not constitute financial, investment, tax, or legal advice. All information, data, and price references are sourced from publicly available reporting and are accurate as of March 2, 2026. Silver prices, tariff policies, and economic forecasts are subject to rapid and material change. Past price performance is not indicative of future results. Investing in precious metals or any financial asset involves significant risk, including the possible loss of principal. The host and creator of this channel are not registered financial advisors, brokers, or investment professionals. Always consult a qualified, licensed financial advisor before making any investment decisions. References to third-party analysis, J.P. Morgan, Bank of America, Citigroup, Silver Institute, IMF, are for informational context only and do not constitute endorsement of any product or service. This channel does not receive compensation from any precious metals dealer or financial institution.